Hello and welcome to Commodity Culture. Today I want to talk about uranium ETFs, specifically URNM in the States, that is the Sprott Uranium Miners ETF, and HURA in Canada, the Global Uranium Index ETF from Horizons. I want to talk about why I like these ETFs so much as investments in the uranium space, and as I'm Canadian, I also want to discuss why HURA makes up the majority of my uranium portfolio specifically. So first I'd like to touch on what makes these ETFs similar and the differences between them. Management expense ratio is the same for both, 85 basis points. The dividend, however, is quite a different story. The last dividend that URNM paid out was around 8.6%, whereas HURA was only 1.4%. So make of that what you will. It should be noted that both ETFs pay dividends annually. The holdings of the two ETFs are very similar, with the main notable exception being that Sprott's ETF holds, big surprise here, the Sprott Physical Uranium Trust as its main physical fund, whereas HURA holds Yellowcake PLC. Now it should be noted that Sprott also has Yellowcake PLC in its holdings, just as a smaller percentage of the overall portfolio. I've put links to the prospectus for both ETFs in the description below, so you can go ahead and check them out and look at the similarities and differences in more detail. So now let me give you my 4 reasons for why I like these ETFs as investments in the uranium space and why HURA is personally my biggest holding in uranium right now. Reason number 1 is diversification, with an emphasis on large producers and physical funds. Now, all ETFs are created to essentially give diversification within a specific space. However, with these ETFs, they are heavily weighted towards Cameco and Kazatomprom, the 2 largest publicly traded producing companies at the moment, and they both have a large allocation to a physical fund. URNM is SPUT, Sprott Physical Uranium Trust, and HURA, of course, Yellowcake PLC, as I mentioned earlier. In my opinion, every investor in the uranium space should have some amount of Cameco and Kazatomprom in their portfolio, and these ETFs have approximately an allocation of 20% to each of them, and so that gives you quite a large chunk, especially for someone like myself who keeps it as my largest holding. I feel great and I sleep well at night knowing that I'm holding shares from the 2 largest producers out there. In addition, having a fairly large allocation to physical funds in both of these ETFs gives you exposure to the spot price of uranium, which is the lowest risk way to access the space, in my opinion. So this diversification also gives a large exposure to companies in a variety of risk spectrums in the uranium space, and the holdings are distributed as such. So the largest percentage allocation goes to the large producers, Cameco, Kazatomprom, as well as physical funds, and then from there to the larger developers like NextGen, Energy Fuels, Denison Mines, and then going down into more speculative explorers or smaller developers as well. So reason number 2 is access to uranium stocks across different exchanges. Kazatomprom is only traded on the London Stock Exchange, and same with Yellowcake PLC. So these are stocks that, although I could buy through my broker, there are extra fees associated with it and a little bit of extra hassle. So it's good to get all of these different stocks, a lot of Australian stocks trading on the ASX as well. Being able to access those and have them all under one umbrella is very convenient. Number 3, saves a ton of time on due diligence. Now, I love to dive into individual uranium stocks as well, and if you guys enjoy this content, then I'll probably go ahead and dive into some individual stocks and give reasons why I own them as well. But having an ETF like URNM or HURA allows you to not have to worry too much about due diligence except for in the uranium sector itself. So when I have friends who approach me about investing and who are interested in uranium and who are willing to at least do the work to do their due diligence to understand the thesis of why nuclear energy is such a surefire bet. Again, my opinion, none of this is investing advice, but I tell them that the best place to start is in an ETF like these ones, because they don't have to dive into all the individual specifics of every single company to try to understand what the risk reward potential is. They don't have to know about management. They don't have to examine the different deposits. What stage is this particular uranium company at? Are they exploring? Are they developing? Are they in production? Instead, they can just buy the ETF and get access to the whole broad spectrum of uranium companies and not really have to worry about it. And I feel the same way. As I mentioned, I love to spend time looking into individual uranium stocks, but there's only so many that I can put effort into. I like to go really deep on my due diligence, and this limits the amount of stocks that I feel comfortable holding in my portfolio. So having access to these ETFs means I don't really have to worry about it because I'm already so bullish on the uranium thesis. I can just keep investing in an ETF, and I believe it will pay off in the future. Number 4, and the final reason, is low level of risk. For all of the reasons I explained before in terms of diversification, the fact that it holds the large producers and the uranium physical funds as the largest holdings, these things combined make it so that the risk is much lower than if you were to speculate on a small explorer, or even put all of your eggs in one basket in one of the big producers like Cameco, for example. And now, of course, we know with a lower risk profile comes a lower chance for reward. These ETFs are not likely to be 100 baggers, or maybe even 10 baggers. But, if I can earn 2 or 3 times what I'm putting into one of these ETFs over the course of this coming uranium bull cycle, then I'm satisfied with that, and it lowers my risk profile greatly so I can sleep like a baby at night. And this low level of risk also actually makes me more confident to invest in individual companies outside of the ETF. As long as I take my time and do my due diligence, and I keep an ETF as my main and largest holding in my portfolio, I'm more comfortable speculating on other companies because I know in the end, if nuclear energy is going the direction I think it will, then I'm basically going to have a surefire bet in these ETFs. Alright guys, I want to finish by saying that of course nothing in this video was investing advice. Please do your own due diligence. If you have any questions about anything I've discussed today, please leave it in the comments below and I'll be sure to get back to you. And moving forward, I may also dive into some individual stocks I own in both the uranium space, potentially oil and gas as well. So if you'd like to see that content, please do subscribe, like this video, and hit the bell notification. I'll see you guys next time. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.